Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Thursday, November 20th, 2008. Japan's trade balance undershot forecasts, with the seasonally adjusted balance down 180 billion yen. In non-seasonally adjusted terms, the trade deficit amounted to a 63.9 billion yen shortfall. The third time this year trade was negative. Exports fell 7.7%, the biggest drop since December of 2001, while imports grew 7.4%. With Japan's key trading partners facing recessions or recessionary conditions, demand for Japanese exports is faltering. For example, shipments to Europe plunged 17.2%, while demand from the US dropped 19%. These trade numbers bode ill for the export-heavy Japanese economy, which is looking at a weak fourth quarter of GDP growth. Markets across Asia posted sharp losses Thursday, with the Nikkei 225 down 6.9% as the trade data added to yesterday's sell-off on Wall Street. The Aussie-Yen pair, usually very sensitive to sentiment in equity markets, sank 300 pips in today's trading and is 530 pips off its high from yesterday near 63.90. Risk aversion was full-blown today, helping to boost the yen against all of its rivals. In Germany, producer prices remained flat in October, defying expectations of a 0.6% decline. Annual prices, however, did cool to 7.8% from 8.3% in September. In the UK, retail sales fell 0.1% in October, but that was a much smaller decline than the 0.9% drop expected by economists. The annual rate actually increased to 1.9% from 1.8% in September. Consumers bought more food, which offset lower spending on other goods. The better-than-expected headline result masks a very tough retail environment, and the Bank of England seems ready to cut rates to 1% after slashing them 150 basis points to 3% last month. The pound yen, also a key measure of carry trade, saw an 800 pip slide from the 147.80 level, which corresponded with the fall in U.S. stocks yesterday and going through today's falls in Asian and European markets. The pair found support at the key level of 139, which has acted as support 3 times since October 23rd. The pair bounced off this high as U.S. stocks staged an afternoon rally. In a surprise, unscheduled move, the Swiss National Bank slashed interest rates by a record 100 basis points. The central bank has become more concerned over the economic outlook and does not feel restrained by inflation fears anymore. The move may also be a reaction to a fresh round of stock losses that have again rattled confidence in financial markets around the world. It was the third unscheduled move by the SNB since the beginning of October, when rates were 2.75%. Despite losses in European stocks, the Euro-Swiss franc pair rose today after hitting an intraday low near 1.5125. That was most likely a response to the rate cut by the Swiss bank, as the Swiss franc usually gains during times of risk aversion and falling stocks. The euro retested its high from yesterday near the 1.53 level. In the U.S., weekly jobless claims took another large step backwards as claims rose to the highest level since 1992 as firms lay off more workers in the face of a deepening economic slump. Jobless claims rose 27,000 to a higher than forecast 542,000, while the total number of people continuing to receive unemployment benefits rose to 4.012 million, the highest that figure has been since December of 1982. The Philly Fed index fell into further negative territory in November, declining to negative 39.3. New orders and employment went deeper into negative territory, while the prices paid and received gauges turned negative for the first time since 2003. Expectations for future activity slid, suggesting the region's manufacturing activity will continue to decline over the next 6 months. The Conference Board's leading index decreased 0.8% for the month of October as stock prices, building permits, consumer expectations, and the index of supplier deliveries made large negative contributions to the index. Following the negative fundamental data in the U.S., stocks fell lower, with the Dow Jones falling to a 6-year low below the 8,000 level. However, stocks managed to stage a rally, with the Dow climbing 160 points higher as of 1 p.m. Eastern, which helped reverse some of the risk aversion seen overnight. The dollar-yen pair, which fell 150 pips from its open to the 94.30 level, rallied 180 pips to bring the pair above the 96 level. However, only a short time later, U.S. stocks fell back into the red, moving the pair back in the yen's favor. In Canada, wholesale sales increased 1.5% in September, completely reversing the 1.5% drop in August. The increase defied expectations and was fueled by recovery in the automotive sector. In a second release, company operating profits were up 7.6% for the third quarter. Profits in the non-financial sector were up 9.1%, largely due to strong performance by oil and gas extractors and petroleum and coal manufacturers. The US dollar-Canadian dollar pair surged today at the start of New York trading as oil fell below $50 a barrel briefly and concerns about a severe global recession outweighed the positive data from the Canadian economy. The greenback jumped 380 pips to test 1.2940, but then eased somewhat in afternoon New York trading. Let's now shift our attention to some upcoming releases. Japan will be deciding on interest rates, though it is expected to hold at 0.30%. Overnight, both Germany and the Eurozone will release preliminary data on November's manufacturing and services activity. Tomorrow morning, the fundamental docket is very light, with the only significant release being the Canadian Consumer Price Index data. And that wraps up another day in the Forex markets. Join us tomorrow right here at cmsfx.com as we wrap up the week. Thanks for tuning in and happy trading.